Hello, my friends. Today is November 9th, and this is Markets Weekly. What a week in markets, right? So many big things happening, both in markets and in the world. Most notably, of course, we saw the S&P 500 surge past 6,000, although closing the week a little bit below. As many of you know, last December, when the S&P 500 was trading comfortably below 5,000, when people all over the place were crying for recession, I said that we would have a tremendous year in the S&P 500 and gave a 6,000 target. So permit me now to gloat a little bit. Okay, now, of course, at that time, I didn't know that we would actually get 6,000. I just knew, based on my judgment on the financial system, how the world works, that we would have a tremendous year, and it has been a tremendous year. In June, again, having a little bit more clarity, it seemed like the only way we would get to 6,000 was through a Trump victory. That's what we got, and we are at 6,000. So today, we're only going to talk about one topic, and it's a big topic, and that is what this all means. Because, frankly, it seems like the country is going to change, and the world will be as well. Now, before we proceed further, I want to note that some of you are not happy with the outcome of the election, and I understand that. But I will also note that I saw, heading into the final stretches of the election, Vice President Harris just running around and just comparing her political opponent to historical mass murderers and selling all sorts of things that are not true. So if you are feeling upset or apprehensive about the outcome, remember that we already had President Trump for 4 years. Everything was fine. And a lot of the things that you heard are simply not true. For example, one of the most egregious examples of this is what's commonly called the fine people hoax, which has been said by Obama, by Biden, and by Harris, which basically they tell everyone that Trump called Nazis and bad people to be very fine people. The truth is that never happened. In fact, that's the complete opposite of what Trump said. Now, the context is that a few years ago, there was a lot of commotion in Charlottesville. Trump got on stage and said that we're fine people on both sides, noting that, of course, in any group of people, you have a lot of commotion, a lot of chaos. You don't really know what's happening. Some of the people were really just earnest protesters. But then he immediately said this.
And you had people, and I'm not talking about the neo-Nazis and the white nationalists, because they should be condemned totally. But you had many people in that group other than neo-Nazis and white nationalists, okay? And the press has treated them absolutely unfairly.
So as you can see very clearly, Trump openly, strongly condemned the Nazis and the white supremacists and so forth. So if you believe that, and if you heard that, you were lied to. And I would also add that during Trump's first term, tremendous amounts of people were saying this guy is a Russian agent and so forth. Said that for years, but then we had an independent inspector general take a look, and he found no evidence of that. So again, a lot of the things that people are most afraid of when it comes to Trump are just based on hoaxes. Okay, with that being said, let's continue with our program. So the election's outcomes was really unequivocal. If you look at a map, you can see that Trump won the Electoral College, won the popular vote. And if you look at the quote-unquote swing states that many people were mentioning, things like Pennsylvania, Nevada, Arizona, and so forth, Trump won all of the swing states. It was a very, very clear election, carried the Senate, and although we don't have the House results so far, it looks highly likely that the Republicans will also take the House. Now, all this means that there is a strong popular mandate for Trump to carry out his agenda. And that agenda is very, very different from the agenda of the prior administration. And so that is really shaking markets. Looking at price action the past week, well, first we'll see that equities obviously going to the moon, doing tremendously well. In particular, you can see Tesla up almost 30% this week. Looking at currencies, you see the dollar just strengthening massively against other developed market currencies. Looking at rates, we did see kind of a jump in the 10-year yield after the election. That's retraced a bit. And interestingly, we saw gold sell off. So what to make from all this price action? I think the way that I'm going about explaining this is first we'll talk about Trump's foreign policy and then domestic policy and explain price action through that. Now, starting with foreign policy, the big change that Trump is proposing is, of course, the liberal use of tariffs. Now, during the campaign period, the tariffs were being billed as some kind of national sales tax. It would raise costs and so forth. Now, that's, again, political rhetoric, totally nonsense. You can actually hear Trump explain this himself in his Bloomberg interview he did a few weeks ago.
America at the moment has $3 trillion worth of imports. You're going to add tariffs to every single one of them. That is going to push up the cost for all those people who want to buy foreign goods.
No. What's going to happen?
That is just simple mathematics, President Trump.
It's not. Yeah, it is, but not the way you figure it. I was always very good at mathematics.
Yes.
Let me tell you, you're saying $3 trillion.
That's
Those companies,
$3 trillion worth of imports.
and they don't have to pay. And if the higher the tariff, the more likely it is to have them come into the country.
The higher the tariff, the more you're going to put on the value of that piece, those goods, the higher people are going to have to pay in shops.
Ready? The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay the tariff.
That will take many.
So basically what Trump is saying that the tariffs are going to be a negotiating tool. He wants companies to build factories in America and create jobs for Americans. If the countries don't do this, I mean, he's going to put tariffs on them, not small tariffs, but really, really big tariffs. So they have no choice but to move here. Now, this is kind of already scaring some people. The European Union, notably Ursula von der Leyen, president of the European community, gave a speech saying that, maybe we could buy more US oil and gas. So again, this is already having some outcomes. More broadly speaking, if you are like me and you studied economics in school, you would have gone through countless economics classes telling you that trade is good, free trade is good, and it is good, but the good benefits are unevenly distributed. If you can just look back a little bit, you can see that in this free trade period, millions and millions of Americans lost their jobs. Or you can look across the sea to China. China does not practice free trade, right? They sell a lot of stuff to the US, but if you want to sell stuff into China, not as easy. You really have to have some kind of joint partnership or some kind of approval. And over the past few decades, this policy, not at all free trade, has done tremendously well in China. They really pulled hundreds of millions of people out of poverty. So this free trade dogma, this is really not the whole picture. And what Trump is trying to do is to try to change this entire free trade apparatus such that it could be more beneficial to American workers. Now, to be clear, this is going to be a bumpy ride. Other countries could retaliate. There could be a lot of commotion. That was certainly the case the first time around when Trump did his trade deals. But ultimately, though, through that process, we did get to renegotiate the NAFTA deal in North America. And of course, we did get some concessions on trade with China. Now, that being said, this is going to be messy. We already know that Trump rehired Robert Lighthizer to run his trade policy. And Robert Lighthizer, this time around, seems to also be fond of maybe some currency policy in his toolkit as well. So we'll see how that develops. But this trade policy goes a long way in explaining the dollar's reaction. Now, if you put big tariffs on other countries like China, like Europe, it's going to be bad for their currencies. Many countries, let's say Germany or China, have a big industrial policy that is geared towards selling goods to other countries. And the US is the largest consumer market in the world. As we all know, Americans buy lots of stuff, and when they run out of money, they borrow money to buy more stuff. And because the US is such a large consumer market, that is what gives Trump leverage to do these negotiations. But at the moment, the European Union not doing so well when it comes to their economy, and China neither. So if they were to put tariffs on Europe and China, That suggests weaker economies for them and for other countries that export to the US, and that would force a monetary policy response such that their central bank would have to be a bit more dovish. And you actually see that in pricing as well. Trump pricing suggests more rate cuts from the ECB. Again, widens the interest rate differential, strengthens the dollar. And you can also think further that maybe it would lead to more fiscal stimulus in China as well. I don't know. But again, this is this whole big chessboard where there are a lot of moving pieces. We only see what we see right now. In the future, we'll have more insight as we see what the other players do and as Trump picks his cabinet out. Now, another thing that has to do with foreign policy, of course, is war. Now, Trump, during his presidency, didn't start any wars. He's been very vocal about ending the war in Ukraine, and I would think wants to have a more stable Middle East. And, immediately afterwards, his election, it seems like there was a bit less of a geopolitical premium in markets. You saw gold selling off, and it seems like oil reacted negatively as well. So a lot of the conflict in Ukraine is possible because the Western powers continue to finance it. Now, Trump has been very open. He doesn't want to do this anymore. And so I would consider that conflict to be settled. Again, you may not like how it's settled, but it is going to be settled. In the Middle East, Trump seems to has a history of standing strong for Israel against other neighboring countries. So maybe the overwhelming power of the United States would also deter other actors in the Middle East. So maybe we have more stability there. Yeah. In any case, on another note on oil, it's possible that Trump could put on sanctions on Iranian oil, and that could decrease the supply of global oil. That it counterbalance the otherwise pro-drilling aspect of the Trump agenda. So we don't know, a lot of unknowns here. But I think this is what explains both the dollar strength and when it comes to foreign rates, reaction in markets, and of course gold as well. Now, moving on to the domestic agenda. Now, I think what really stands out for Trump is immigration. So that is kind of a huge issue that Trump has latched on to ever since his candidacy several years ago. Now, the American public obviously don't like massive illegal immigration. Now, this is true, I think, broadly speaking. Many countries in the Western world are unhappy about immigration policy. Trump has said that maybe first off, of course, he wants to seal the border, less illegal immigration. I think that's going to be done. Whether or not he's going to deport all the tens of millions of people that have come here, I think that's a lot harder to do. But the priority, of course, would be, as he's mentioned before, to deport illegal immigrants that have committed crimes. Now, the policy that he's mentioned before that I heard on the All In podcast was that he would like to give the right to work to foreigners who come to the U.S. and graduate from U.S. universities, or at least some of them. So
it's so sad when we lose people from Harvard, MIT, from the greatest schools and lesser schools that are phenomenal schools also. And what I wanted to do, and I would have done this, but then we had to solve the COVID problem because that came in and, sort of dominated for a little while, as you perhaps know. But what I want to do and what I will do is you graduate from a college, I think you should get automatically as part of your diploma a green card to be able to stay in this country. And that includes junior colleges too. Anybody graduates from a college, you go in there for 2 years or 4 years. If you graduate or you get a doctorate degree from a college, you should be able to stay in this country.
That suggests not an end to immigration, but a change in the composition. So maybe we would have more high-skilled migrants enter the U.S. and fewer low-skilled migrants. Overall, this would suggest some inflationary pressure on labor. Again, that's a hard thing to say because if you have higher wages, that could translate into a wage price spiral where you have, let's say, companies forced to raise their prices because they have to pay their workers, and so you get into this inflationary spiral. Another possibility is simply that you have higher wages and companies simply have narrower profit margins, so companies eat the cost. And that's actually how what's happening in the European Union right now. It's possible it could happen here. It really depends on competition policy, whether or not we have a better enforcement of antitrust, or if the market becomes just more competitive. So that is not clear either. Although I think, broadly speaking, the market thinks of Trump's policies as inflationary. Not just because of the labor front, but also because of fiscal spending through tax cuts. Now, the Trump tax cuts that he enacted during his first term were set to expire next year. With Trump carrying Congress, it's almost certainly to be renewed, and Trump has mentioned that he would like to further cut corporate income taxes. Cutting taxes is not good for the deficit, right? So obviously it increases the supply of treasuries, but also it's very stimulative to growth. You're essentially giving more money to the private sector. Private sector will spend that, and so you're going to have more growth and inflation. And so that's, I think, explains both the higher interest rates, in large part actually, because the market is pricing in a more hawkish Fed. So we're going to have fewer rate cuts next year. So another big part of the Trump's domestic agenda is just deregulation. Again, less regulation is in general considered to be more growth friendly. And the stock market likes that. So we can see possibly more growth as well. So what else did we, okay, so that of course explains equities. So all in all, I think this is a very, very positive picture for the economy so far. And so that's why you have such a strong reaction in markets. Now, going forward, I'm less clear if this will be sustained, because when we were going about this huge transformations, you have a lot of interest groups that you have to go through. People who benefit by how the world works right now may not like losing their special benefits. And Trump is promising to be a disruptive candidate. You have, for example, RFK wanting to do big reform in how pharmaceuticals are run. You have Elon Musk wanting to cut the deficit to, reduce government spending, maybe efficiencies by having fewer government workers to try to improve how this works. So right now it's just foggy, but so far the market's verdict is very powerful. And as we get more clarity going forward, we can think about what this actually means. Now, to reiterate though, now that we've hit my S&P target, I am much, much more cautious at the moment. And I think that we may be in the process of carving out a multi-year top. Okay, so that's all I prepared for today. Thanks so much for tuning in. Remember to like and subscribe. And check out my blog if you're interested in hearing more thoughts on markets. Talk to you all next week.